Welcome to BullionMax. I'm Mark Allen along with Sean Reynolds, and we're going to talk about precious metals again today. Sean, how are you?
Doing well today, Mark. How are you, sir?
I am very well. I'm very happy to say that we're going to talk with Ed Steer today. He's a well-known analyst and popular commentator on the precious metals market. Ed has a long history in precious metals, which began about 45 years ago during the final upside blow-off in silver and gold when the Hunt brothers tried to corner the silver market back in the very late 1970s. And I do remember that, which culminated in the high price spikes in both those metals in early January of 1980. It's very timely with the current market volatility that we have Ed Steer with us right now. We go to British Columbia and we welcome Ed in. Hi, Ed. How are you today?
I'm doing fine, and thanks very much for having me on your show.
Our pleasure. And during the show, we will tell you how you can learn more about Ed. We'll have his website up there on our screen for you. Ed, I'm going to ask you to talk a bit about your background. How did you get involved in precious metals?
Well, I'll give you the very short Reader's Digest version. I'm old enough that my grandfather fought in World War I, and he brought back a whole bunch of silver and gold with him when he came from his fighting in Belgium and France during that time. And every once in a while, when I was a little kid and a little boy, he'd haul this stuff out, and I'd go through it, and gee, of course, at the time, Canada had its own silver coins, so I thought nothing of it. But, you see all these coins from a foreign country, so all these foreign countries, so I was interested. And as you pointed out, when the Hunt brothers tried to corner the silver market, I didn't know very much about it at the time, but I jumped in there and I made a whole bunch of money, a lot of money for that time back in the late 1970s, as you pointed out. Then I turned around and lost most of it on a crash. Okay, so I was just like every other uneducated silver investor. It was going up, so I bought it and held it all the way down, etc. And then 20 years later, when the internet came along, my interest in precious metals grew anew because all of a sudden information was available everywhere. I ran across the Gold Antitrust Action Committee, which I'm a board member now, and also ran across silver analyst Ted Butler, whose work I follow religiously, and just about everything I say in the interview today will be through because of him, because he's the real Oracle Delphi when it comes to the silver market. So now I have my own newsletter, wrote for Casey Research for, 8 or 9 or 10 years, and I've been on my own for the last 6. And that's how we arrived at the point we are at today.
So with the volatility in the stock market right now and precious metals being looked at as part of a portfolio, have you seen anything like this right now in the last recent history of, say, 50 years?
Well, yeah, we saw it when we went off the gold standard. When Nixon took us off the gold exchange standard in 1971, we saw the price head up to, $800 an ounce. But that was at a time when there was no futures markets in any of the precious metals, and there was no way to control their prices. So the precious metals shot up to whatever prices they were, which were enormous sums back in those days. But since then, all 4 major precious metals, gold, silver, platinum, and palladium, are trading in the COMEX futures market. And they would be much higher than they are right now if they weren't being actively managed. But have we seen this before? Yes. But right now, as most people in the precious metals industry know, that the prices are being actively managed. And as far as I'm concerned, sooner or later it's going to end, and we're going to see prices for silver and gold, especially silver, that people, quite frankly, aren't going to believe when it does happen.
Well, silver is really important because of all the technology that uses silver. So the need for silver, other than coins and rounds and bars, in technology, silver is very important. So I can see the fact that silver is going to increase.
Oh, absolutely. And, silver has become a major industrial metal. And there's no electronic thing out there. Any electronic or electrical thing out there has some small component of silver in it, and some have more and some have less. But the industrial demand, because of the new technologies out there and the energy saving, whether they be solar panels or these wind turbines or whatever, the new electric cars coming out, the demand for silver has just been going steadily higher every single solitary year. And to make matters even worse is that, now that there's people out there like the Wall Street silver crowd that are now actively telling people to buy silver because it's so undervalued. So the price pressure on silver from not only the industrial side, but also from the investment side has been growing ever stronger over the last 2 or 3 years. And like I said, the silver demand is already outstripping supply, and it's only a matter before the price breaks free to indicate that.
Yeah, it's interesting. A lot of our clientele who are new to investing are looking at a situation where the appreciation is something they're looking to count on, where previously people were usually using their metals to make sure their dollars stayed dollars. And it's kind of interesting to see this this increase in market activity. Like 2015, silver was about $11 an ounce. Oh, okay, well, we're more than double that now, and we're on the uptick again. So what kind of time frame are you anticipating maybe the big run might occur within?
Okay, well, look, I remember way back in 20 years ago, and I bought silver like for $5 an ounce. So it's gone up a lot since then. Sure. But that's a combination of more demand and currency debasement. You have to take that into consideration as well. Sure. We're sitting at $25 silver. We still haven't surpassed silver's old high of 1980 when I first got involved. We've hit it at once since, and we came close. Last year we got up to 30 or 40 or something like that. But we still haven't taken our old highs from 40 years ago. Mm-hmm. So, as I pointed out when we were talking before the interview started, this price management scheme in the precious metals has been going on for 50 years now, and they're desperately trying to get out of it. And how long that's going to take them, I don't know, but the signs are certainly there that they're making that attempt. And I'm expecting this thing to blow up anytime. I know that silver analyst Ted Butler is, just sitting there, and he expects every day that this thing's going to come to an end. But when it does come to an end, it's going to come very, very quickly within a matter of days or weeks. And like I said, we're going to see prices that you can't possibly believe. But it's my opinion that it's going to be over sometime this year. And people know that because they've been following it for years, if not decades, and they're investing accordingly.
When you were, I guess, in the early days, in the 80s, you kind of had a front seat watching the Hunt brothers. Did you suspect anything at that point?
No, that was my first real introduction to the precious metals, and the only thing that I believe was what I read in the newspapers or heard on the radio, because that was the only, or saw on television. The internet didn't exist back then, so I never really had any insight except what the press was saying. And of course, everybody was betting, placing their bets based on that. So my insight, came afterwards once you learned the whole story. But at the time, it was just, hey, it was going up, so why not buy it? And it was a real frenzy back then. I remember that physical metal was almost impossible to buy at any price. Way back then, there was lineups around the block at every bank and every bullion store in town and across the nation. And I'm sure that was true in the United States as well as it was in Canada. So that was my introduction, and we're seeing the equivalent of it today, but it's mostly online now.
Would you say that the what we saw before could happen again?
Not only will it happen again, it will be many magnitudes more intense than that. We're going to see a rush to silver bullion or silver, anything that's got the word silver in it is going to go to the moon, and it's going to be magnified by the fact that we now have the internet. Most people in the U.S. that have a stock trading account of one kind or another on their computer or on their iPhone or iPad or whatever, not just in the U.S., but in Canada and every other country in the world, and I don't care which country it is you pick, India, China, Russia, France, Germany, we're all wired for sound now. We can pick up the phone or we can get online and hit a few keystrokes and buy this and buy that. It's going to be a rush into the precious metals, silver in particular, that it's going to take everybody's breath away before this is all over.
And as you said, the internet is really magic. All this technology is just magic, but it's also allowing the average person to be able to get information and make solid judgments in buying precious metals. And that's what, of course, BullionMax is here to do. And our website is up. If you want to visit our website, learn about precious metals of all kinds. Lots of information there. Sean, do you have any thoughts about the BullionMax website?
Yeah, it's a great place for information. Also, you can see the various and assorted different bullion products that we have available for sale. And some of what Ed has been talking about is taking hold now. You know, some of the premiums are a little higher now on the bullion items than they've been in a while because the supply of bullion items is a little tighter than it normally is. You know, you don't normally see silver eagles at about $10 over spot. You know, a few years ago when I got into this, it was more like $3, $3.50 over spot, not $10. So there are already some of these leading indicators about what Ed's talking about that are in place in addition to what the market is doing and this long time concentration and controlling of the market. So part of our information is the podcast, but we've got information about products out there in addition to some information about the metals in general. So whether you're a beginner or you're looking at more expert level information about products specifically, that's what we've got out at BullionMax.
Got it. And well, thank you for that. And again, the website is BullionMax.com. And if you want to,
do you mind if I add something in here, Mark, right now?
Yeah, sure.
You were talking about the high premiums for the bullion coins and the bars and stuff.
Yeah,
they're ridiculous, is what they are. I mean, I've never seen them like this before, ever. I don't care which website you go to or what product you're looking at. The premiums, like in Silver Eagles, are just enormous. And as something that I pointed out in my column the last couple of days, is that the demand is so huge now for physical product in hand that the sovereign mints and the private mints of the world, and I don't care whether it's the British Mint or the Australian Mint or the U.S. Mint or the Canadian Mint, or all the smaller private mints like Sunshine and A-Mark and all these guys out there, demand is now so great that the demand is limited to what the mints can produce. Whatever the mints are producing, that's what the physical demand is cutoff is, because it's just not available anymore. And that is the situation where demand is now exceeding supply, and the physical market is permanent. It's not going to go away.
And that drives the price up.
Yeah, certainly.
It drives the premiums up. It drives the premiums up. It doesn't drive the price up. The price is controlled by the big 8 shorts in the commodities futures market. All it does is drive the premiums up. It doesn't drive the price of the underlying metal up at all.
Yeah, acquisition cost, yes. Mm-hmm.
Got it. This might be a good time to bring in your chart. Can you explain this chart that we have up on our screen?
Yeah, I consider this to be the most important chart that I publish in my column, and that's produced by Nick Laird at sharelinks.com out of Australia. What this chart shows is the short positions of the 4 and 8 largest traders in every physical commodity that's traded on the COMEX. There's only, 12 of them? I don't have the chart in front of me right now. I'm just doing it from memory. But if you look on the left-hand side of the chart, there's this small one called roughed rice, and it's a very teeny tiny little market. I think the next one is crude oil, and after that's wheat or something like that. But you'll notice that they're sort of graduated by the short positions of the 8 largest traders, which are the green bars. Mm-hmm. The red bars are the four largest shorts. And you'll notice very quickly the standout feature is that gold, silver, and platinum are nailed to the right-hand side of that chart. And with the very odd exception over the last 25 or 30 or 40 years, silver is the most shorted commodity, physical commodity on planet Earth on the COMEX.
Can you give us, I'm sorry, Ed, can you give us a description of short and then also long position?
Sure. Okay. I'm just, from the top of my head right now, the total open interest, now the number of long contracts and the number of short contracts in silver is around 150,000 contracts. So there's 150,000 long contracts and 150,000 short contracts. If you want to go long and bet the price is going to go up, somebody has to be prepared to go short against you at that price. Or if you want to bet the price is going to go down by going short, somebody must take the long position against you. You can't go short or long in isolation, okay? That has to occur simultaneously or the trade can't be made. Right now, what you're looking at is that 8 traders, okay, are short 152 days of world silver production. That's a green bar on the very far right-hand side of the chart. And the 4 largest traders, which is the red bar attached to it, are short 112 days. You know, it is unbelievable. That's 5 months of world silver production. The big 8 are short, and it's almost 50% of the entire open interest in silver. So you've got 8 traders short 50% of the market. Guess who controls the price? And it's mostly the big 4. And as you can see, as you go down the list, platinum is next, and then gold, et cetera, et cetera, et cetera. Right. So if you got a massive 5-month short position, 5 months world of silver production held short by the 8 largest traders, the price is going to be where it is, $25. And as I pointed out before we got on air, take a look at the price of the short position in crude oil, which is what, second from the left. I think there's the big 8 shorts are short 4 days of world oil production, and the big 4 are short 2 days of world oil production, or West Texas Intermediate crude, whatever it is. And as I said, look, if you took the short position in silver and stuck it on the short on crude oil or any other commodity on the far left-hand side of the chart, its price would be in the dirt in seconds. And so, you know, this outrageous short position held by a very small handful of traders. There's only 8 traders involved. And in silver, there are thousands of traders. There's below them that, you know, they hold from 1 contract or 2 contracts or 10 contracts or 50 or 100 or whatever. But these 8 traders, all of them which are banks or investment houses, to a man, are all banks or investment houses, and they're short 50% or more. In platinum, it's more than 50%. In palladium, it's more than 50%. They're short that much of the market. It's going to keep the price suppressed, and it's been that way, like I said, since the early 1970s, which is 50 years now. And that's why the silver price is where it is, and that's why people are biting the snot out of it, because they know this price management scheme is going to come to an end, and we're going to see silver prices, when that does happen, like I said, at the moon.
Yeah, I don't want to get too personal, but with this information, what are you doing with your own investments? I mean, do you have stocks in addition to precious metals, or are you like, no, this is happening, I'm all in on metals, never mind the stocks?
Good question.
Thank you for asking me that. But for the last 10 or 12 years, 100% of my investment portfolio is in the precious metals with no exceptions whatsoever. I own physical metal, I own mining shares, I own paper silver, I own paper gold through Sprott and all these various ETFs and mutual funds. But I do not recommend that investment strategy for anyone, okay? I'm the exception to the rule, but look, I'm talking the talk here with you right now and with everybody else I speak to, and so I'm going to walk the walk. So as I say in my column every Saturday, I'm all in, and I'm quite happy to be so, considering the circumstances that we're under today.
Our guest is Ed Steer. He's a well-known analyst and popular commentary on the precious metals market. He you have a newsletter that people can subscribe to, and we have that information on our screen right now. I'm going to assume from our conversation so far that you believe that the metal that has the most potential of platinum, palladium, gold, and silver, that you're putting your basket in, you're loading your basket with silver.
Yes, I would say that 85 to 95% of my portfolio is in silver. And I'm even more bullish on it than that. Silver analyst Ted Butler, who I spoke of earlier, he's been an analyst in silver now since 1986, I believe, or 1985. He was a commodities broker and knows the silver market inside out and upside down. And he just discovered in the last 3 or 4 months that Bank of America went short 800 million ounces in the over-the-counter market in silver, and about 30 million ounces short in the over-the-counter market in gold. So besides the short position that you're looking at on that chart, which is in the COMEX futures market, there's also this short position held by Bank of America that just came about in the last couple of years. And you couldn't, with supply being just not there and physical demand being over the moon and the short position that would choke a horse, it's hard not to be bullish on silver. And I urge people, if they don't have any, get some before it's too late.
You've alluded to the fact that the precious metals markets are being manipulated. So one, are they being manipulated? And are there too many players now to manipulate the market? So it's a free market situation or not?
It's not a free market situation. If it was, I guarantee you silver would be somewhere between $250 and $500 an ounce, and gold would be over 10,000. And the fact of the matter is that, we're sitting here today talking to each other, but there are no free markets anymore. There is no price discovery allowed in anything. I don't care whether it's in the stock market, in the bond market, interest rates, commodity prices. I don't care what you want to look at out there. What we're seeing is the biggest economic bubble, Tompkin Village, that's ever been built. We are living in financial, economic, and monetary environment far, far in excess of the South Sea bubble and the Louisiana bubble and the tulip bubble. This is light years beyond that. We're living in a world that just, frankly, one of these days is going to collapse in a heap. I was born in 1948, and I remember when everything was terrific up until 1965 or 66, and then they took silver out of the coins, and I remember that because everybody was yanking the silver out of the circulation in the U.S. and Canada. Mm-hmm. But I can tell you right now that the situation now is absolutely insane. We don't have a gold-backed currency. We have a paper system everywhere in the world, and as everybody out there already knows, paper is going to crash and burn. What did Thomas Jefferson say? That paper is poverty. It is but the ghost of money, not money itself. And at some point, the world is going to find that out in spades, and the only thing surviving will be commodities in general and precious metals in particular, because they've been money through all of recorded history, and at some point it's going to be money again.
We have inflation here in the United States. It's starting to creep up and has been probably for the last couple of years. We know that precious metals, especially gold and silver, have been used as a hedge against inflation. Do you think that inflation will come down, won't grow as fast as it has been? And can precious metals, investment in precious metals, hedge that inflationary spiral?
Okay, let's start off with the word inflation for a start. Let's throw that word out the window for a moment. Inflation is caused by currency debasement. What you're looking at is debasement of world currencies, whether it be the U.S. dollar on your side of the border, the Canadian dollar here, the British pound, or whatever. Every central bank is pumping out currency like you would not believe, and we're seeing massive currency debasement. Inflation is going to be with us. And as far as inflation goes, we ain't seen nothing yet. It's going to get far, far worse. And it's not going to stop until we see total destruction of the currency and everything that goes with it. And of course, gold and silver have been, money through all of recorded history. And I don't care whether it's oil or rubber or tin or cocoa or aluminum or copper or whatever, you have to put your money in physical commodities because everything is being debased around it. And only hard assets will keep their value from currency debasement. And of course, the king and queen are gold and silver, and of course, platinum and palladium, if you want to throw them in, which are both mainly industrial metals. But man, if you've got any money, you got to be in commodities and in the precious metals in particular.
This is BullionMax. I'm Mark Allen, along with my co-host, Sean Reynolds. Sean is the customer service manager for BullionMax, and we have our website up on screen right now. Sean, why should people who are thinking about buying gold or silver, palladium, and any of the other metals, why should they visit BullionMax?
Well, a lot has got to do with, we try to make the experience of purchasing metals from us very easy. So we have a reasonable amount of product out there, so there aren't so many choices that it's hard to make a determination of what you ought to buy. The purchasing process is very simple. We accept a multitude of different types of payment methods, and we are also here to help you if you let us know kind of what your personal goals are. Recommend some products, but ultimately, we want you to feel good about what you buy. So we're never going to really sell you anything. We'll present you with some choices, but ultimately, you make the choice on what you decide is best for you, your family, and your portfolio.
And of course, there is lots of information to help educate even sophisticated buyers of precious metals at BullionMax.com. Our guest, again, is Ed Steer. He's a well-known analyst and popular commentator on the precious metals markets. And Ed, in our remaining couple of minutes, what do you think is going to happen? Is the world going to go to hell in a handbasket?
Yeah, well, I hate to say it, but that's pretty much where we're headed. And it's also my opinion. If you look at people like the Davos crowd, the New World Order crowd, and the World Economic Forum, and Klaus Schwab, I get the distinct impression, and what the central banks have been up to over the last 100 years. I get the distinct impression that what's happening to us is deliberate. This is not happening to us by accident. If the banks wanted to cut inflation to zero and get things back to normal and go back on a gold standard and have everybody happy, they could do it if they wanted to, but they're not. They're out to take over control of the world. I hate to bring it up, but that's the way I see it. And over the last long time, and the only way people are going to be able to protect themselves is by buying the precious metals or commodities or something like that. This is not going to go away, and it's going to get worse, far worse before it. And I don't think it's ever going to get better, unfortunately.
Funny, I always thought it was going to be Dr. Evil, from, $1 million, but it's a certain number of banks and investment houses that are really doing it, but it's interesting. You typically don't look at them as the villain or the foil or the whatever, but to your point, this has been going on for a long, long time, and it's coming to a head. And
what did Thomas Jefferson say? I consider central banks to be more dangerous than standing armies. Something like that. I suggest you look up that quote and put it on your website. Well, he knew what he was talking about back in the late 1700s and early 1800s. He was, Thomas Jefferson. If I had to pick one American that's a hero of mine, he's it. And if you look at his great quotes, he was absolute. And Andrew Jackson was absolutely despised central banking, and they are the root of all evil until they disappear from the face of the earth. They're going to continue to control our lives more and more, and that's been going on ever since the central bank, the Federal Reserve was formed in 1913. I'm certain Andrew Jackson is spinning in his grave right now, knowing what's going on.
Well, and that's the one thing Dr. Evil didn't try was banking.
Yeah.
See, this is time and time again. He should have been a banker.
Yeah. In our last, you said that this is a worldwide issue. It's not just Canadian or the United States. Is this a world? Do we have a world economy right now, and the whole world, at least the Western world, is going to go down?
That's pretty much the way it looks right now. If you take a look around, what's the golden rule? He who's got the gold makes the rules. Mm-hmm. Well, the largest holders of gold right now that I know of are Russia, and China is not stating all the gold reserves it's got. Some commentators out there say it's got more than 20,000 tons, and I look at the numbers, and I have pretty good numbers, and I'd say they're right about that. And one of these days, when push becomes shove, they're going to state their true gold reserves, and we're going to see some sort of gold standard rise up out of the east, and that will be the end of the West, I'm afraid. But it's really, really unfortunate. But the central banking has ruined the world as we know it today, and they're not going to stop until they've reached their end goal of being the buyer and the lender and borrower of last resort. It's incredible how much power they've got. They run the world, not the governments of the world.
Ed, we are out of time. We really appreciate your spending some time. Look forward to having you back at some time. Can you tell us where people can reach you and learn more about your ideas?
Well, sure. I write a daily column 5 days a week on the precious metals. It's Ed Steer. What is that guy? I don't even remember my own website. You're going to put it up on this Ed Steer Gold. Silver.com, I think, is my website.
Yes, it is.
And the yes, thank you. Subscription price is US $100 per year, which in Canadian funds is about 127 today. And I write, 52 weeks a year, except I do take a week off here once in a while for a vacation. But get about 260 columns per year for $100, and it's quite extensive, and I consider it to be worth the money. And I have a very loyal and very large subscriber base.
And that's edsteergoldsilver.com, edsteergoldsilver.com for information on our guest, Ed Steer. Ed, thank you very much. Sean, thank you very much.
Yes, and I'd like to thank Ed as well. This has been fascinating.
It absolutely.
Well, and I really appreciate you guys having me on. Thanks a lot.
Thank you. Hold on, Ed. I'm Mark Allen for BullionMax. We'll see you next time. Bye-bye for now.